Hello everyone, welcome to NiftyTrader educational series. Today we will start a new discussion on candlesticks and candlestick patterns. If you are new to candlesticks, I highly recommend that you see our introductory video where it is clearly explained what a candlestick is and what are the various components in a candle and why they are used. So any background, refer to the introduction videos. In this course, we will discuss candlesticks in the following way. We'll start with the commonly used terminology to describe some of the candlesticks names. And in second session, we will talk about various 2, 3 or more candlestick patterns, how they are defined, whether it's a reversal or a continuation pattern, how to identify these patterns, what is the relevance or psychology behind these patterns, and next, how reliable each pattern is, and finally, what makes these patterns strong or weak. So after going through this course, you will be able to read these candlestick patterns, identify them accurately based on various aspects that we'll talk about in this course, and then be able to improve your trading decisions using candlestick. Alright, so first of all, we will describe some of these candles starting with Doji. Now, this is how a Doji looks like. As you can see, Doji has virtually no real body. That means either closing and opening prices are almost same or they are exactly same. But the point is it should have no real body. That means during the day there was no decision made by the market whether it wants to go up or it wants to go down. So it opens at the same price and closes almost at the same price. There can be various variations of Doji like this, or this. Now this one is known as gravestone Doji. Doji usually signifies indecision, but in case of gravestone Doji, it implies bearishness. Or in case of dragonfly Doji, it signifies more of a bullishness rather than indecision. But more or less, in most cases, Doji will always be about indecision, and if it's found at the top of the market or after a continuous uptrend, it implies that now bulls are rethinking of their position, they are readjusting to the new reality, new price, because the price has gone too far from the fundamentals and now they are indecisive. Similarly, in the downtrend, Doji can imply indecision because the bears are rethinking their position, whether they want to continue selling or now is the time to become a bull. Now another candle type is hammer. As you can see, hammer has little or no upper shadow. Lower shadow should be at least twice the size of real body. It is known as hammer when it appears after a prolonged downtrend. A similar pattern, exactly same shape, is also known as hanging man. Now the difference between a hanging man and the hammer is that the same candle type is called hammer when it appears after a prolonged downtrend, whereas if it appears after a prolonged uptrend, it is called as hanging man. This is the only difference. They look alike, they are exactly same in shape, they have the same definition, but very different implications. Third one is inverted hammer. Now as you can see in the picture, inverted hammer has little or no lower shadow. Upper shadow is at least twice the size of real body. Now next candle is Marubozu. Marubozu is a large candle with virtually non-existent shadows. So it can be red candle or it can be completely green candle. So green candle is very bullish, red candle, all things considered equal, is very bearish. The next in terminology is long shadow. Now as you can see, these candle patterns where you will find very small body or non-existent body and both sides the shadows are pretty large. The next candle type is short body. In Western terminology, it is also known as short day. Again, the difference between high and low of the day is very small, and this is why it is called short body candle. Next, spinning top. A short real body that is vertically centered between long upper and lower shadows. So the shadows are big, but the body is small. Not non-existent but small, and usually spinning tops will appear after a prolonged uptrend or a prolonged downtrend. Only then they are known as spinning top. Okay, so here we conclude our discussion on candlestick terminology